All right, let's finish off on the accumulated depreciation account from the previous video. So accumulated depreciation account is the sum of all depreciation. Remember, depreciation reduces the value. It simply tells you how much of the asset you have used, all right? So it reduces the value of your asset, but obviously you can't credit depreciation against your actual asset. That's why we create accumulated depreciation account, which actually increases on the credit side. Okay, so accumulated depreciation account will increase on the credit side. Okay. And it will be increased by your depreciation amount for the year. Okay. In this case, let's just quickly calculate it. How are you going to calculate our depreciation for the year? Um, Obviously, accumulated depreciation, as I've specified, it will go up on the credit side and it will be increased by depreciation. It will go up on the debit side and it will be increased by depreciation. So if I had to put a sign to accumulated depreciation, it will be minus the plus. It is just the valuation allowance account, okay, to correctly value to make sure that assets, when we um, show our assets in the statement of financial position, we show them at the value that is equivalent to income that can still be generated from that asset, okay, or money that can still be generated from that asset. So it's just the remaining economic benefits of the assets, okay. The balance on vehicles will be on the credit side, if I am not mistaken. It will be 220,000, right? Okay, it will be increased by the depreciation of all vehicles, which is 112, which belongs to all vehicles plus 54,000, which is the depreciation of the new vehicle. So you add them up and you write the total, which is 166,000. Therefore, our accumulated depreciation has gone up. We didn't sell any asset, therefore we just gonna have our balance carried down of 386, which reflects the total usage of this asset. So from the following financial year, the total usage of all the vehicles will be 386,000. Please note that if we sold any vehicle, we're going to write that amount on the credit side, on the debit side, sorry. We're going to put in the accumulated depreciation of that specific asset that had been sold on the credit side. Let's continue to equipment. Okay, for equipment, what do we have? We have balance at the beginning of the year, and the cost price of equipment at the beginning of the year was 258,000. We sold equipment worth 18,000. We did that in the previous video, and we are left with equipment worth 240,000. Okay, so this will be the cost of equipment that we have left at the end of the financial year. How do we record this? We will simply remember equipment is an asset, it goes up on the debit side. So to record this, we will record the balance on the debit side, and the balance on equipment at the beginning of the year will be 258,000. From that 258,000, we will simply subtract the cost of the equipment that has been sold. So we have balance at the beginning of the year, which is 258,000. You minus the cost of the asset of the equipment that has been sold, which was 18,000, not 180,000. Put in extra zeros there by mistake. Okay. Now balance carried out on equipment will be 240,000, which is the equipment that we still have left. So that is equipment that we have had from the beginning of the year. We're going to have it for the entire year. We didn't buy any equipment, that's why we have nothing on the debit side. and we sold equipment. That's why we've got the cost of equipment sold, which we record as asset disposal. Let's do the depreciation quickly. Please note that we had one equipment until the 31st of, it was the 31st of January, all right, 2013. It was sold to the majority shareholder, which is the CEO's wife. Note that accumulated depreciation of all equipment at the beginning of the year was 74,000. I think in the previous video, I made a mistake by saying accumulated depreciation at the beginning of the year was 11,250. It was actually 6,750. In case you are lost, let me just go back to that just to show you what I'm talking about. So accumulated depreciation at the beginning of the year. Okay. That was the carrying value at the beginning of the year. I wasn't looking for that actually. I was looking for accumulated depreciation at the beginning of the year. Accumulated depreciation at the beginning of the year will be 6,750. 6,750. Okay. The 11,250 was the carrying value. Apologies for that mistake. Please correct it and that in your notes. Okay. When it comes to the depreciation of this equipment, I'm going to start with the source. So you're going to take the total accumulated depreciation of all equipment, which was given to you in the tangible asset note. And then you're going to subtract the accumulated depreciation at the beginning of the asset sold, which is 6,750. It'll give you accumulated depreciation of the remaining vehicles, and that will be 67,250. Okay, so before we do anything, I'm simply going to calculate the carrying value, not of the vehicles, but of equipment, the carrying value of equipment sold at the beginning of the year. The cost price of equipment at the beginning of the year obviously will be 18,000, and accumulated depreciation on the equipment will be 6,750, giving us the carrying value of 11,250. Okay, and when we calculate depreciation, and please note, even though I'm showing you this working, you could have just taken it straight from your asset register. There was no need for calculating depreciation on equipment because we've already done this in the asset register. When you're given the asset register, you don't need to worry about calculating equipment because the calculation is already there in the asset register. Please note that the accumulated depreciation on this equipment by the 31st of January 2013, which is when we sold it, will be 10,500. This amount of depreciation for this year will be recorded on the credit side of accumulated depreciation account, and that 10,500 will be recorded on the debit side because it will reduce the accumulated depreciation to make sure that we're only left with the depreciation of the assets that are still within the business, that are still being used by the business. When the asset goes, it goes with its accumulated depreciation. Therefore, it doesn't make sense for us to still have that 10,000 in the balance sheet when we don't have this equipment any longer. Okay, I'm going to go straight to calculating depreciation of the remaining equipment. So we will start first by calculating the cost, by calculating the carrying value. I don't know why I have the carrying value. We'll first start by calculating the carrying value, which is cost minus accumulated. The cost of the remaining at the beginning of the year was 240,000, and the accumulated depreciation of the remaining equipment at the beginning of the year. I don't know why I have vehicles here. It's supposed to be equipment. It'll be 67,250. So the cost of the remaining equipment at the beginning of the year will be 240,000, and accumulated depreciation of the remaining equipment at the beginning of the year will be 67,260. The carrying value at the beginning of the year of all the equipment will be 240,000 minus 67,250. That will give us 173,715. To calculate depreciation for the current year, I am going to take the cost because they specify that equipment will be depreciated at cost, and the cost price of the remaining equipment is 240,000. And I used the remaining equipment for the entire year because I've had them the entire year from the beginning of the year. I will simply take 240,000 multiplied by 25%, multiplied by 12 over 12, that will give me 60,000, which is the depreciation. For this year, I will record it on the credit side, meaning that my depreciation for the current year in total will be 60,000 plus that 3,750 of the equipment sold, and then it will give me the total depreciation for the current year. And 127,250 will be accumulated depreciation on the remaining equipment, which is just the 60,000 plus 67,250. When I record this in the accumulated depreciation on equipment, I will start with the opening balance, which was 74,000. I will add it with the depreciation for the current year of the equipment that has been sold, which is 3,750, added with the depreciation of all equipment that were not sold, and that will be 60,000. So my total depreciation for this year is 63,750. And then I will have to put on the credit side accumulated depreciation of the equipment sold at the end of the year as at the date of sale. If I remember very well, it was 10,500. Um, Look at your asset register. You will know why I took that 10,500. It will give us the carrying value of accumulated depreciation, which is 127,250. And that will be the balance of accumulated depreciation at the beginning of the year. The last general ledger account we are going to prepare will be the asset disposal account, which I said will always be the same. On the debit side, you only have the cost price of the asset being sold, and that will be 18,000. Then on the credit side, you'll have the accumulated depreciation of the asset sold, and that will be 3,000. It will be 10,500, and you'll have the selling price of the equipment sold, which was 800, and that will be on the credit side. Why do we have creditors control or CJ? That is because at times we don't actually sell our asset on credit, we trade it in. So the amount of trade in that we agreed to will be creditors because we still owe the the entity from whom we are buying the equipment. So it reduces whatever we owe them. We can't say that debt is because they are also traders, all right? And please note that you just check the left hand side and the right hand side. And then normally what I do is that I take um, whatever I have on the debit side, I minus everything on the credit side. If the amount is positive, then it means it's a loss. If the amount is negative, then it means it's a profit. In this case, remember it will be a profit if your carrying your selling price is greater than the carrying value. If you remember very well, the carrying value of this equipment was 11,250, and then we did that, it was 6,000 something. Okay, it was actually, when I calculate the carrying value, let me just go back to it. The carrying value at the date of sale, we calculated it here, it will be 7,500. Carrying value at the date of sale will be 7,500. We will use that to check whether we made a profit or a loss from the sale of this equipment. I will simply say selling price is 800. Carrying value is 6,000. It was 7,500. You'll realize that here the carrying value is greater than the selling price. Therefore, we made a loss. The question is, how much is that loss? The loss on sale will be 800 minus 7,500, which is 6,700. All right, and that's what we're gonna have, right? That is the asset disposal account. It will always be this way. It will never change. Let's record everything that we spoke about in the tangible asset note. I've already done land and buildings, and I've already done vehicles. The only thing that I still have to do will be equipment. With the equipment, I started with the depreciation for the current year, which was 63,300. I put that in brackets and the movements, okay? And I showed you as well how I got that 63,300. And then I calculated the carrying value at the date of disposal, which was 7,500. I just showed it to you right now. And put it in brackets because disposal means that it is gone, okay? So we no longer have that equipment. It's gone. That's why we're putting it in brackets. All right. So under our movements under equipment, it will be negative 7,500 minus 63,750. It will simply give us a movement, and our movement will be negative 75,250. Please note that cost at the end of the year does not change. It's balance at the beginning of the year, cost of equipment at the beginning of the year, plus cost of equipment purchased minus cost of equipment sold. In this case, we did not purchase any equipment. We will simply take the 258,000 and minus 18,000, which is the cost of equipment that we've sold. That will give us 240,000. At the end of the year, our accumulated depreciation will be calculated the same way. Balance at the beginning of the year, which is 74,000, plus current year depreciation, which is already under movement, that is 63,750. And then we minus accumulated depreciation of the asset sold. We minus accumulated depreciation of the asset sold. And the accumulated depreciation of the asset sold at the date of sale will be 10,500, and that will give us 127,250. Okay, that is accumulated depreciation at the end of the year, therefore giving us carry value at the end of the year of 112,750. And that is what we are going to have, right? I will simply say, I hope you enjoyed the video. Please don't forget to comment or tell me what you need me to make a video of. All I can say for now is